Hi everyone. This is lecture 15 of the 2026 mentorship program. And in this lecture, I will be doing a live top-down analysis on the major pair on the 2026 mentorship program. Now, on the previous lecture, I talked about doing a market lecture. Try to talk about the market review. So I did postpone the market review because I wasn't around. So I will be talking about what price did last week and talking about what I will be anticipating going in this week. So I'll just try to cover up everything in this lecture. And it was based on some personal issues that made me to postpone the lecture. I didn't post the pre-recorded video. But in this lecture, I'll try to cover up everything so that we'll be up to date on the 2026 mentorship program. So let me pull up the chart. And currently we're on the dollar index. Let's make this full screen. I'm on the 1 hour time frame of the dollar index. Let's move to the weekly time frame. So last week, I think the whole idea last week was price we're expecting the weekly fair value gap to trade lower. Which I told you guys that my draw on liquidity on the weekly time frame is anticipating lower prices to run the sell side liquidity. That was all I was talking about last week live top down analysis. So going in this week, I'm still sticking to the idea of anticipating lower prices. My drawn liquidity is to see price run the sell side liquidity. Now, last week I was anticipating a down close candle after a retracement to the weekly fair value gap, which clearly you can see price closed as an up close candle, trading close to the mid range of the weekly fair value gap, but overall you can see it's an up close candle. Even on the major trading days, which are the days I do look for my entries, which are Tuesdays and Wednesday, price did trade higher, trading close to the mid range of the weekly fair value gap. On the daily time frame, on Monday, price traded to the weekly fair value gap. Tuesday, retracement, closing as a down close candle. Wednesday, traded higher. Thursday, traded higher. Friday, retracement. I was anticipating lower prices from on Wednesday after seeing the way price closed on Tuesday. Seeing the price created a swing high, most likely I was anticipating a fill on the fair value gap, which you can see there's a fib at the fair value gap. I was anticipating a fill on the fair value gap as a short-term target and a fill on this fair value gap below. That was my idea going in. So I took a sell on most currency pairs that are correlated with the dollar index, which on Euro USD I took a buy, GBP USD I did took a buy, and USD JPY I took a sell. Which all which when I get to those currency, I will explain the result of those trades. After the retracement on Tuesday, the retracement went below the daily fair value gap, creating a swing high. So going in this week, still anticipating lower prices. I want to see price trade through the daily fair value gap and possible if it's possible for price to trade more lower deep, and my drawn liquidity is the run on the sell side liquidity. Now on last week, fundamental side, which we talk about the high impact news. NFP was postponed last week, so I think that made most of the reaction on the dollar index a little bit delayed because I was anticipating the NFP news to lead to an impulsive move trading lower, but the news was postponed. And from the opening price this week, price have been trading lower on the dollar index aggressively. Seeing that price action, seeing the 1 hour trend leading to the downside, gives me more confirmation to the bias of anticipating lower prices, which you can see on the 1 hour time frame. Based on this indicator. Last week, you can look at last week price action. You can see the trading to the daily fair value gap, which is aligned with the weekly fair value gap. But you can see after the closing price on Tuesday, you can see there's a 1 hour shift in structure. So I was anticipating low prices and price traded higher. Took my stop. Once I get to that currency, I will explain more on it. But let's just assume that I took a sell from the dollar index directly, which I told you guys I don't normally take trade directly from the dollar index. I use it as a directional bias to pairs that are correlated with the dollar index. So price trade higher, took out the swing high. On Friday, another shift in structure. Opening price form the 1 hour fair value gap. Here's the 1 hour fair value gap. Opening price from the 1 hour fair value gap. Price respected it, traded lower. Currently, I'm still anticipating lower prices. So I should see price fill in the daily fair value gap and possible run to take out previous week low. And if the trend were to continue, I will be anticipating lower prices for a complete run on the sell side liquidity. So you can see it more clearly. So make sure you study on how price traded last week. Even if price didn't trade to a bias, there's still a lot to learn from how price delivered last week and leading to the postpone of the NFP news. So make sure you study on how price delivered. Next is Hero USD. On the weekly time frame on Hero USD last week, I told you guys that my draw on liquidity, I'm anticipating higher prices for price to use the weekly fair value gap as a support, and my target is the buy side liquidity. And based on the correlation to the dollar index, you can see they are inverse correlated to the bias. On the dollar index, I'm anticipating lower prices. And on Hero USD, I'm anticipating higher prices. Move to the daily time frame. On the daily time frame, last week, Monday traded deep into the weekly fair value gap. Tuesday closed above the opening price, forming a swing low, which I was anticipating higher prices to trade through the week through the daily fair value gap. You can see there's a daily fair value gap. I was anticipating higher prices to trade through the daily fair value gap and to this fair value gap, which I use a Fibonacci to mark out the fair value gap. But on Wednesday, price respected the fair value gap, traded lower, and on Thursday, price took out the swing low. Friday, price took out Thursday's low, traded above the opening price. So looking at this price action, you can see price formed another swing low, and based on what price is doing, we will be anticipating higher prices to trade through the fair value gap, which currently price of trade through the fair value gap, which the next draw on liquidity is to see a fill on this fair value gap. On the 1 hour time frame, looking at the 1 hour time frame last week, the trade I took advantage of after price traded deep into the weekly fair value gap and at the same time into the daily fair value gap. You can see before the closing price on Tuesday, there's a shifting structure. After the shifting structure, I took a buy from the other block. You can see how price retraced after the closing price on Tuesday. Took a buy, my stop was at the swing low. I was anticipating a fill on the daily fair value gap, which you can see I used the fib to mark out the fair value gap. So let's take this off. So I use a fib to mark out the fair value gap. That was my drawn liquidity. I want to see a fill on the fair value gap, and my overall target was a trend to the fair value gap above, which price run to a 2R before retracing and stopping me out at a break even. Now I moved my stop to a break even because if you have been going through the lecture, you know that whenever I'm holding a trade and the trade is way above 2R, it's already on a 2-hour profit, above 2R, I move my stop to break even. So I moved my stop to break even, but price did a retracement and I was stopped out before actually running out the swing low on Thursday. On Friday, I tried to get in on Friday on a re-entry, but I wasn't planning on holding any trade throughout the weekend based on the volatility on the current market condition. I don't want to hold any trade throughout the weekend, so I didn't take advantage of any setup in looking at the fair value gap as an entry. But price opened during the opening price. Price retraced to a 1 hour fair value gap, used it as a support to trade higher. Currently, I'm looking at price retracing to a discount. Price retracing to a discount, I will be anticipating higher prices and price trading higher to the fair value gap, and I'll be looking to see price fill in the fair value gap. So most likely, once there's a possible retracement, I'll be paying attention to the retracement and how price is reacting to the new week opening gap. You can see the gap. I'm paying attention to how price is reacting to the gap. Then I will be taking another re-entry. Mostly if I'm using the lower time frame like the 15 minutes. It's support from a 1 hour fair value gap or from the new week opening gap. I will be anticipating higher prices to the daily fair value gap. And the weekly time frame on GBP USD, still the same bias with Euro USD. I'm currently anticipating higher prices. After price took out the buy side liquidity, after I run the buy side liquidity, retracement to the weekly fair value gap, I told you guys that I'm anticipating higher prices for price to run the buy side liquidity. Last week, price traded deep into the weekly fair value gap before retracement and before the opening price of this week. I was anticipating higher prices. Last week, on Monday, price traded deep into the daily fair value gap. Tuesday, price formed the swing low, closing as an up close candle. So I was anticipating higher prices. Wednesday, price traded higher before a retracement, running out the swing low. You can see it's quite similar to how price traded on Hero USD, but on Thursday, retracement was deep. Price traded lower than Hero USD. After price traded lower, Friday, price took out Thursday's low, did a 1 hour shift in structure, which I took advantage of before closing the trade so that I don't hold a trade throughout the week during the weekend. So Monday price open and currently price is currently trading above the opening price. On the 1 hour time frame, now if you have noticed that I normally show the trade that I took advantage of. I show you the losers, I show you the winners, I show you the trades that are on break even. I try to show enough transparency to how I'm taking advantage of whatever bias I'm calling out in price, whatever area I told you guys that I'm anticipating price to trade to, just to show you that I'm fully taking advantage of whatever setup that I talked about or whatever trade that I'm talking about or whatever bias I'm interested in. The idea is to show you guys how to have an idea and how to take advantage of the idea at the same time managing your risks. So on GPUSD, the trade I took advantage of was on Wednesday, quite similar to the trade on Hero USD. Here's the entry. Took an entry from the other block. Here's the entry, and stop was at the swing low. Stop was at the swing low, and my draw on liquidity on GPUSD, I was looking for a complete run on the buy side liquidity. It was quite close compared to Hero USD, so I was anticipating price to trade through the daily fair value gap. If there's a trade through the daily fair value gap, I move my stop to break even. And I will hold the trade throughout the week to see if price were to trade to the buy side liquidity, which currently you can see that price did not trade through the daily fair value gap for me to move my stop to break even. So my stop was still at the swing low. There was still risks involved, which you can see price trade lower and I was stopped out. Now, before taking this trade, I did took a first trade from the closing price on Tuesday. I took a trade from the closing price on Tuesday, which I was stopped out. It was at this swing low. I took an entry. Stop was at this low. Stop was at this low, and I was stopped out before taking a re-entry. So I took two trades from GBP USD, and both of them was a loss. So it was around a minus 2% from the trade I took advantage of on GBP USD. Now, after price traded lower on Thursday and Friday, running out Thursday's low, after the shift in structure, I was looking at price using the breakers block as a support, which you can see price used it as a support to trade higher. Now, personally, my trade did not get filled because of the spread, broker spread. So the trade didn't get filled, but this was the trade idea. And here's the entry. The overall idea was to see a complete run to the buy side liquidity. But the trade didn't get filled because of brokers spread, so I didn't take advantage of the setup. But currently, I'm still looking at price trading higher. If there's an impulsive move higher, a retracement to the swing high should be an entry to use the candles as the breakers in anticipating higher prices. I just want to see more development in price, then I will be taking a buy. As long as price is still aligned with the idea, I will be taking more entries in anticipating higher prices to trade higher. But my first drawn liquidity should be previous week high, which is the swing high. Should be the first draw on liquidity if we're looking at price running the buy side liquidity. So this is going to be a low hanging fruit going in this week. On the weekly time frame on GBP USD, last week talked about how I'm anticipating price trading lower. That after price retrace to the weekly fair value gap, I will be anticipating lower prices as a down close candle. Which clearly you can see that on USD JPY price closes as an up close candle. Now, why is the price action more aggressive on USD JPY? Mostly because throughout last week, the JPY index, or you can see the JPY pair, have been trading lower for a while. There have been a lot of sales in the JPY index, and directly it affects the JPY pair, which is the yen currency. It affects the yen currency a lot. That even if there's a lower prices on the dollar index, it wouldn't lead to lower prices on USD JPY because there was a day the price was trading. I think it was on Tuesday. Price was trading lower on Tuesday on the dollar index, but USD JPY wasn't trading lower that day. I did took a sell, but I was stopped out on USD JPY. The idea is that whenever you're looking at pairs, whenever you're looking at any currency, make sure you look at the index pairs. Make sure your trade idea is aligned with the index. Because if the index isn't trading to that idea, I'm well as sure, I'm 100% sure that the trade wouldn't be playing out. So you need to see a technical correlation between both currency assets. So you need to see a correlation in the index pair of the currency you're trading, which if you're to trade the USD JPY, you have to look at the dollar index and the JPY index, which is the Japan index. So make sure if you have to trade this currency, you look at both currency because understanding that correlation is very, very important because it did play a very big role on last week price action. Now, most of the time, they are well correlated in whatever price they're trading to, but whenever they are trading to the same price on the index pairs, it mostly leads to consolidation on USD JPY. And price will only trade to the direction of the currency that is aggressively trading to that bias, that is aggressively trading either higher or lower, and the USD JPY will react to that currency. So last week the JPY pair was dropping down aggressively. So let me show you guys the currency. Let me show you guys the currency before actually moving further. You can see last week, this is the JPY index pair. Last week, you can see the aggressive move trading lower, which currently prices were tracing that is leading to the lower prices on USD JPY. When looking at the JPY index, you can see the aggressive price last week that led to lower prices. So make sure you understand correlation. Make sure you look at the index pair to see that they're fully correlated before actually taking any setup. So here was the opening price form last week on JPY index, and you can see how price traded lower aggressively throughout the week. On Friday, there was a little bit of a retracement. Sorry, on Thursday, there was a little bit of retracement. That was when I took advantage of a trade on USD JPY, which on Friday price traded lower and I was stopped out for the closing price. So let's move back to USD JPY, USD JPY. So on the daily time frame on USD JPY, I'm still anticipating lower prices regardless of what prices trading to the JPY pair because I'm currently looking at as I'm looking at an SMT on the JPY pair where price already took out a low on the JPY, but on the USD JPY price haven't even getting close to that high. So looking at this price action, I'm still anticipating lower prices for price to trade lower to run the previous week low. So you run the previous week low, that's my draw on liquidity, which is actually the sell side liquidity to the daily fair value. Yeah, here's my draw on liquidity going in this week. Now, last week on Monday, price traded higher. Tuesday, higher, closes an up close candle. Wednesday, higher, traded above the mid range of the weekly fair value gap. Thursday, higher prices, and Friday, close as an up close candle. On the 1 hour time frame, you can see the trend. Here's the opening price. You can see how price have been trading. No retracement because the JPY index have been dropping lower. They are inverse correlated, leading to higher prices. So on Thursday, there was a shift in structure, running out the swing low. So I took a sell from the other block. Here's the other block. I took a sell from the other block, which you can clearly see I was stopped out. Not on a full percentage before the closing price because I closed the trade manually, but it was still a loss to me if I were to record it in my journal, which I did record it in my journal as a losing trade that I lost on the trade. So here was the trade I did take advantage of, which prices traded higher, took out the swing high. So I took a total of 3 losses with one break even from last week price action. So I was down 3%. I can say this is not up to a 1% loss because I closed it during the mid range of when I was around 0.5% in losses before the closing price of last week. So I can say it was a 2.5% loss on last week price action. But so far, price have been trading lower. You can see there's a 1 hour shift. And if I were to see more low prices on USD JPY, I will be looking to enter on a 1 hour point of interest in price trading lower to the first drawn liquidity, which is the daily fair value gap. So I'll be going in this week focusing on daily setup on how to day trade. I will be talking on how to day trade on the next lecture. More focusing is going to be how to understand the daily delivery, how to take advantage of the daily delivery, which I might trade it live so that you guys can understand how to do it live. But I'm still thinking on doing it. I still haven't concluded on doing it live. I might just do a regular video when I'm taking the trade and after it played out. I'll just look at which is more best and which I wouldn't spend most of the time doing it because it's just one lecture and I've talked about it multiple times, showing you guys how to use it. I've done a lecture about it in detail 26, so it's just a revive on what I have talked about, but doing it live. So I'll try to see how we get around it and present it. Mostly, I need to see a good price action before actually taking any trade. Then show you guys what are my trade idea before actually taking the trade. But at the same time, make sure you mark out previous week gaps from the closing price on last week to the opening price of the new week. Those will help you to understand on what price is currently doing on the lower time frame perspective. Because looking at this price action, you can see that currently prices are still below the new week opening gap. As long as price is below the new week opening gap, there's a high chances in price trading lower. Mostly if it's aligned with the higher time frame perspective, which in the higher time frame perspective, we are anticipating lower prices. So make sure you do your personal study, look at the index pairs that are correlated with the main currency so that you could understand when to take advantage of your setup and when there's a full correlation between your major pairs. So I told you guys to stick to one currency so that it can be easy for you to go through the process of understanding or building a trade plan on every individual week or every individual day. And when you get good at it, then those are the times for you to think if you were to add any currency, which personally I don't think is well important. The most thing about it is to learn how to execute perfectly, which you can get to a perfect execution, but at a good state, get good at executing trades, get good at understanding when price align with your bias. That's very important. It's not about trading multiple pairs. It's about learning how to trade when prices align with your bias. Because during my learning process, I spend most of the time taking that adding up more currency will help me in making more profits, which I later found out that that wasn't the case. It was far from what I was actually trying to achieve. It was more about learning how to execute your trade plan. First, you make your trade plan as simple as you can so that you can easily understand it and easily implement it on multiple weeks or multiple days. Then execute it live. Learn how to execute it live. Now, it's not compulsory in you using a live account, which personally I would advise for you to use a demo account. The point is that you looked at price, you understand what price was doing, you had your entry level set, and you watch how price delivered correctly, and you journal the process on how price delivered to your draw on liquidity. Now, it doesn't matter if the trade is a win trade or a losing trade. The point is that you learned through the process of price delivering to whatever draw on liquidity, either taking out your stop or trading to your target. So going in this week, I'm still anticipating low prices. So there's a run on the sell side liquidity or any other development or any other price action on the dollar index that might lead to me changing my direction. But as long as price is still respecting the weekly fair value gap, I'm anticipating lower prices. So that is it for this week. So that is it for this week live top down analysis. See you guys in next week top down analysis.